Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for August 25th, 2017. Happy Friday, everyone. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, the ES is up on the day here. We've seen bulls come in to defend 36 to 40 yet again, 3 days running after the price went through it on Tuesday. And so far, we're continuing to coil up. Every one of these markets looks very, very similar, whether you're looking at the ES, the NQ, CL. A lot of these markets very tightly coiled at the moment, and eventually you're going to see that energy released. And given the overall trending structure, again, the expectation is that this thing will release itself to the upside at some point, but we got to watch for the potential in both directions. Again, should price drop to this zone, it would still be a great opportunity to buy between 2400 and 2405 for a shot to return it back to value and back toward the top of the range and perhaps to the top of the range. So right now, not a whole lot to do at the moment. Very tightly coiled price action. You have to be very careful trading in this middle chop zone, but if we get outside of range, it could be a nice near-term buying opportunity. If we take a look at the intraday time frame here, here's the intraday. One thing you'll notice about the intraday is that price is pushing higher here today already. And over the last couple of days here, 36 has been held on multiple attempts. And we also have 48s that has become very, very clear resistance, 48 to 49. Yesterday we started the day with price at 48s and price immediately dropped. We're now back at that area right now. And this is a short-term area of resistance here between 48 and 49 that if price cannot find acceptance beyond it, look for a return perhaps back towards 42, 43, and maybe even across the range. So overall still range bound in ES. Looking at the NQ here, higher time frame. Let's go out to daily chart here. In the NQ, we've also seen a bunch of tightly coiled price action in this range. You can see right here, very tightly coiled, even right to the apex. Overall, pullbacks have been buying opportunities. Every time it's come down, it's been right back up. But we really haven't seen a whole lot of acceptance outside of 5,900 just yet. Every time we get up there, we've seen bears come in and defend. We've seen the FOMC key level go offered. The bottom one is bid. And right now we're stuck between those two values. So at the moment, very tightly coiled price action. Not a whole lot to do at the moment. But we are gearing up for a bigger move. So again, upside is the most likely path. Any pullback, still a buying opportunity, and we'll continue to watch the development of this one. Crude oil, again, we can almost cut and paste this analysis for these three markets. You can see again, look how tightly coiled this market is. We have very, very light volume for the most part early in the week. So right now we have a market that's sitting and holding. We do have Janet Yellen speaking here later on today. This morning, Jackson Hole is ongoing at the moment, so we could have a little bit of volatility here, but for the most part, we're kind of sitting, and whenever we start to see that expansion one way or another, it could be big. We could be headed right back to 43.76, or we could be making a move back toward 52. So right here, we're going to continue to watch it. Given the current upward pace and the upward path, again, an upward move would be easy to call, but again, anytime you have tightly coiled price action, that volatility compression doesn't really say anything about direction, so it could be either way. You just have to be very cautious right now. And GC, the one that we had that was most directionally powerful here, that rejection was very, very nice, and the idea was that we would get a return back toward 1250. We knew it could be a few days here, 2-3 days, where we could build out up here between 98 and 1300. We've seen several defenses of that zone, but we've also seen higher lows day over day. We've seen an inside day each of the throughout the week basically. Monday's range, and then Tuesday was inside, Wednesday was inside, Thursday's inside, and now Friday's inside. So that's very, very unique. Right now we have a 3.4 point range in gold. That's 30% of ADR. Again, above 1300, you have to release that position and look to reestablish another one. But right now, as long as it holds, there's still a shot to return back toward 1250 value. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and happy Friday.